you'll have to exclude this, excuse this slide deck. It is very long, so I'll just skip through a number of slides as we go, so I'll keep us on time. I don't really need to talk to this slide much. Everyone here understands the metrics of why we're looking at lithium. Suffice to say, we are going to be in a shortage. We are looking to come online around about 2025, 2026, which is where we think we're going to see a big uplift in lithium prices again, feeding into that shortage. As Matt said, we are Solas's sister company. We are operating in Brazil. We have a lot of years operating in that part of the world. Certainly for the last 15 years, Latin has been operating in here. I've lived and operated in Chile and Argentina and Brazil. We are in a district that is getting a lot of attention at the moment, Sigma Lithium. I'm sure you're all aware of those. They're about 70 kilometres to the south of us. This area has hydro-backed power. We have a PEA that has just come out, and I'll get onto that, but power pricing through here is around 2 to 3 cents a kilowatt hour, so it's very cheap. We have a main highway running within 10 kilometres of the project. We have a town of 40,000 people about 10 kilometres away from the project. So from an infrastructure perspective, we are very well positioned. We are an advanced exploration project going into development. We have roads, as I said, we have a port 380 kilometres away. So from that perspective, we are well positioned to be going into production. We've been operating in the southern part of our tenements. You can see them here. The Colina deposit is our main flagship deposit, but the other dots you can see there in the orange are other prospects that we've been working on over the last probably year and a half. This is a project that was developed from Greenfield's boots on ground exploration. We spent a good year mapping all the way from Sigma north across the granite contact until we found this area that we liked. We found some outcropping pegmatites. We had to shut everything down due to COVID. We got back on the ground at the end of 2021 and drilled the first hole into this in February of 2022. We understand the system very well here. All of our drilling to date, there's about 200 holes into the prospects that we have here. It's all diamond drilling. It's all diamond drilling from surface or fully oriented core. So our structural database is massive. And what we've identified here at Colina and the broader Salinas project is a 26 kilometre long district scale structure that is hosting multiple pegmatites within that. We have a deposit declared at Colina. We are very close to declaring a deposit at a Fogs Block prospect. It's about 12 kilometres away. And we have identified another 3 outcropping pegmatites that we will get to in due course. This is the Colina deposit. We declared our first resource on this in December of last year. We upgraded that in June this year to the current resource, which you can see there, sitting at 45 million tonnes at 1.34. It is open at depth, it is open along strike, and we are continuing to drill that and expand it as we go. I've got 10 drilling rigs on site. They've been churning away 24 hours a day, 7 days a week for the last probably 8 months, and they will continue to do that all the way through this year and into next year. We've drilled 57,000 metres so far this year, and I've just put in a budget for about the same for next year. So we have an aggressive drilling campaign out here. We know we're going to be extending our resources significantly over the next 6 to 12 months. We actually have a resource coming out in about a month or so's time. I've cut the database off again, and we will do an upgrade to this current resource. I expect it to grow into around the 50 to 60 million tonnes, and it's still open again. But we are looking to do a resource upgrade for the DFS, which we're sort of launching into just shortly as well. You can see a plan view of the project here. This is the main Colina deposit you can see outlined there. We've been drilling in that white and the first yellow ovals there, geophysical targets. This is a structurally controlled system. We know what this system is doing. This is some pretty coarse geophysics that you can see there. We have very detailed magnetics over the top of this, and we can see the controlling structures that are hosted within that northeast-southwest structure. We can see them all the way along the 24 kilometres of our structure that we've identified. So we know we're going to be finding more of these deposits as we continue to explore. As we get up onto the middle of that image there, we go undercover, so there's no outcrop, there's no geochemistry that we can do at surface. We can see the structures in the geophysics, but it's just a matter of drilling, and we'll just continue to step out with our drilling and expand our resources through that area. Again, this is just showing some of the pegmatites that we've seen and mapped and drilled. Kalina is an unusual pegmatite in that it's very clean. As Matt was talking to before, these things are fractionated magmas as they move out from their source. Where we are at Kalina, we only have spodumene. It's our only lithium mineral, which is unusual. Usually you get a mixture of spodumene, lepidolite, petalite, but we only have spodumene here. So essentially it's a very clean pegmatite, which is very good for metallurgy, and I'll touch on that just shortly. But over that full 24 kilometres of strike, we see this same system developing. It's a series of north-south pegmatites within our overall regional structure, consisting of quartz, feldspar and spodumene, and that's it. We have very little mica in the system. We don't have any sulfides in the system, so our concentrate is very clean. It's very easy to process, and we get very high recoveries because of that. We have just finished a PEA, and I'll show you the economics of that just shortly. Suffice to say, all of the current resource is open pittable. We're down to about 400 metres below surface. As I said, it's still open at depth. Our PEA, because of restrictions on the ASX, is based on only 26 million tonnes of our 45. We will be upgrading our resource from the inferred classification that it is now into indicated and measured, which means we can bring more of that resource into the DFS, and we will look to do that. And I can assure you it changes those metrics significantly when we bring more of that resource in, bearing in mind as well that we are going to continue to grow this resource over the next sort of 6 to 12 months. Metallurgically speaking, this is very clean material. This pilot plant is up at Lakefield. Our development team is actually up there today. We've got 2 tonnes of material sitting in the Lakefield lab to do a larger test work program. We've done about 3 rounds of DMS work at the moment, so that's very clean, very easy processing, and we're getting very high recoveries because of, again, the fact that we've only got spodumene here. So of the material that we put into the DMS system, we're getting 93% recovery of our lithium units out of that, which is unheard of. In a mining environment, we're not going to get that high. Obviously, that's pristine environment. So we're banking on around about sort of 62% recovery at a mine operating environment, which is still very good. And with some other work that we're doing in terms of spirals and tails cleaning up, we're looking at around 70% overall recovery, a bit over that in the mining environment, which again is very good. The PEA, as I said, we've just finished that. The economics of that are very strong. This is based on 26 million tonnes of our 45. You can see it generates an MPV of 3.6 billion. It has an IRR of 132%, payback period of 7 months, all-in sustaining costs of 530 odd per tonne spodumene, and that includes $120 a tonne transport through to China. Where we are located in Brazil, we are ideally positioned to be going into the US. If we look at transporting into that market, we drop down to about $80 a tonne transport, so we bring our costs down to about 500. We've used very conservative pricing in terms of spodumene for this, and I'll show you what that is just now. But essentially, we'll be producing 500,000 tonnes of concentrate for 11 years, with half of our resource sitting in that mining schedule. So we've got significant upside in the economics of this project. Just simply bringing the rest of our resource into the mining thing, we're looking at doubling our resource, or doubling our mine life, or doubling the production profile that we're looking at here. And that's essentially what we aspire to be doing. We want to be a tier 1 producer, so we want to be generating 1 million tonnes of concentrate per annum. To do that, we think we need to get our resource up to around the 80 to 100 million tonnes. And as an exploration geo, I'm always optimistic, but I know that with the targets that we've identified so far within Kalina, we have a very clear pathway to that. As I said, we'll be upgrading our resource in a few weeks' time. I'm expecting that to go to somewhere between the 50 to 60 million tonnes. As well as that, I'm hoping to declare a maiden resource on Fogg's Block. That'll again show people the pathway that we're going to get to this production level. And this is significant. So, we have a ramp-up period of a couple of years to get us to our nameplate 500,000 tonne, but within that time frame, I'm hoping to get our resource base doubled so that we can then look at doubling our production profile and getting into that tier 1 status. I spoke about pricing before, and we're using, as I said, a very conservative number in our PEA. We're using $16.99 or $1,700 a tonne. We could have used significantly higher numbers than that. A lot of our peers have in their PEAs, looking at sort of over $2,000 a tonne. If we do that, the metrics that you've just looked at are significantly changed. We think this is a conservative number. The graph you can see on the slide here is from Fast Markets. This is their profile. You can see a downturn in the spodumene price from now until about 26, 27. And the reasoning for that is obviously softening of the lithium markets, with the current downturn in global economics, etc. But the takeaway that we looked at, this is a fairly realistic look through to the pricing, and they're bottoming out of that. The graph there is at $2,000 a tonne spodumene. So we are well below that. So we think our pricing is very conservative. We took a very simplistic approach. We used Fast Markets and Benchmark, and we took an average of those two, and then discounted obviously for our SC 5.5 that we'll be producing. So we're looking at $1,700 a tonne. We're also looking at an SC3, which is a 3% concentrate that we're going to look at through spirals. So this is reprocessing of our tails. As you would know, or you may know, that if you have material that's less than a millimetre in a DMS circuit, you're basically not going to be getting that out of a DMS run, so that'll go to the tailings. Instead of selling a green tails like some, again, our peers do, Sigma is selling that quite effectively at the moment, running at about 1.5%, I believe. We're going to do a bit of cleaning up on that. We have some very good consultants that I'll show you, I'll speak to in just a minute, that have helped us with that. And we can produce a 3% con and get another 11% recovery out of our system from there. So that gets us up to that 70-odd% recovery overall. And we're using, again, just a discounted number for that, and that's built into our PEA. So we are looking at all of these sorts of things to maximise recoveries. We're looking at ore sorting and other bits and pieces as well, but very simple processing, very easy and very cost-effective processing to get good recoveries out of this system. Operating in Brazil, as Matt pointed out before, is certainly very good. It's a good district for us to be in, and the support that we get from local governments is amazing. The photo there, the guy in the middle, is Governor Zema. He's the governor of Minas Gerais. He has put our project on priority status within the Brazilian government, and what that means for us is we have a fast-tracked approval process. Normally your approvals are sort of around 12 to 18 months. Because of the status that we've been granted by the government, we now have a 6-month approval process for our environmental approvals for the mine. That's significant, and again, as Matt sort of alluded to, operating in this part of the world means that we can very quickly get projects into production. We have a very clear pathway, and it means we can take advantage of the uptick in lithium prices that are coming in the near term. We're also very close with Sigma Lithium. Again, people here would probably know of Sigma. Anna Gabriel, you can see in the middle of the project there, or the middle of the slide there. We're very close with Sigma. This is their project 70 kilometres to the south of us. We're using this as a blueprint for us. They built and developed this project in 14 months. We think we have a very similar time frame. A lot of the consultants that helped get Sigma into production and approved and permitted are now working with us to take us down that same pathway. As I said, we use this as a blueprint. We're very close from a technical perspective. I've been down on site during the commissioning of the plant down there at Sigma. So we're learning from the pitfalls that they went through, and they're really paving the way for us, and it's certainly a good relationship for us to foster. This is a very quick timeline of where we are. You can see the JORC resource that we've got coming out at the end of this year. That will be sort of about another 4 to 5 weeks away, I would believe. But we'll continue to drill. I've just put in my new budget for next year, and we'll be doing again another 55,000, 60,000 metres of drilling over the next sort of 12 months, where we continue to grow the resource. We'll continue to upgrade the current resource that we have to be able to declare reserve status on that next year. You can see there the MET test work is ongoing. We've done a number of rounds so far, and that's given us the recoveries that we've used in the PEA. As I said, we've got 2 tonnes of material sitting up at Lakefield at the moment, and our development team is there to kick that test work off and that will form the basis of the DFS. The PEA has just come out, and that's gone very well for us. It's a very robust base case for us, and it's only up from there, to be quite honest. Full definitive study was launched at the end of last year. We've been running that in parallel with the PEA. We have a team dedicated to that, a mining engineer based here in Canada, as am I. We have another mining engineer based down in Minas Gerais who specialises in building projects. So he's VP of development, and he is driving the DFS and to have that delivered by mid next year. You can see the environmental approvals there. We started collecting our base case in field work at the end of last year. That's all now complete. We're just documenting all of that, and we'll have that submitted by mid next year. And with our 6-month approval time, by the end of 2024, we'll have a completed DFS. We'll be fully approved and permitted to start construction in 2025. If we use Sigma as a template, we're looking at sort of 12 to 14 months build and ramp time. That gets us into production in mid-2026. As I said, around about when we think pricing is going to start to tick up again. At the moment, we have no offtake agreements. We are fully unencumbered. We have nothing in place at all. And we've made a distinctive decision to do that until we finish the PEA. We didn't know what we were going to be producing. We didn't know what we had to sell. Now that is done, we have a very clear pathway for that, and we've just started the process to engage with about the 20 offtake people that have been banging on our door for the last 10 months to start that process, so we can then lock in an offtake agreement or some sort of partnership as part of the DFS. North America obviously is an ideal home for us. There's a lot of factories being built here. There's a lot of supply shortage in this part of the world, and where we are at the Port of Ilias, we're obviously very close to the US and Europe. Obviously, China is a big market, and we're certainly getting a lot of interest from offtakes and OEM from that part of the world. But there are significant cost savings for us to be going into the US. So we see that as a natural home, but all of our doors are open at the moment, and we will consider those markets as and when they come. Board of Directors, Chris Gale, you can see there is also is our Managing Director and also the Executive Chairman of Solace. Other directors that we have there, non-exec, have been with the company for some time. Peter Oliver, though, I will make a note of. Peter, you may have heard of a project called Greenbushes. Peter built and turned Greenbushes from a tin tantalum mine into the world's most profitable lithium mine. He came on board about a year ago to help us make the transition from explorer through to developer. Peter's done it before, and it's around Peter that we're now building this team that are going to be building this project for us. He's an industrial chemist by trade, very smart man, and certainly assists me a lot with the work that we are doing. We have about 65 million in cash. We've just topped that up. We put another 35 million in the bank so that I can do some more drilling and we can do some early works. But suffice to say, we are fully funded through to the end of the DFS, and we don't need to go and raise money. CapEx for our project sits at around 250 million, and that includes about 40 million in contingency. We will be doing a capital raise probably mid or so next year for that full development capital. We haven't yet set our sights on exactly what form that's going to take, whether it's equity, debt, prepayments, we're not too sure. That will come out of the discussions that we're having with our offtake partners over the next sort of 6 months or so. Market cap of around 720 million. We have been up over $1 billion in the last little while, but coming back like everyone else has with the downturn in lithium prices. But we're very well positioned. We have a number of institutional investments or investors here in North America and in Brazil. And again, it's part of why I'm here, is to engage with those people and grow that portfolio of investors here in North America. But more importantly, this is my team. An incredible group of people. I've got over 200 people on site pushing this project forward. I'm the only gringo that runs down there. Everyone else is Brazilian. They are a very dedicated team working incredibly hard for us, and they make my life very easy. But these are the guys that are generating the wealth for the company, and they need recognition. So yeah, that's us in a nutshell. Thanks very much. Happy to take any questions if we have time.